Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update. We've just done a series of few videos which was all deflationary points. I'm going to run through a bunch of inflationary points right now to give you a good idea. In my opinion, most of the deflationary things are going to end up leading towards hyperinflation because the government is not going to allow deflation. And so when serious things happen, the government's going to step in and bail it out. But what that means is we don't have any money. So they're going to print and borrow more money. The more of that stuff that we do, the bigger problem we have. Well, here, those were deflationary points. I'm just going to run through a lot of inflationary points that have happened in the last couple of weeks. The government had a $220.9 billion deficit, by far the largest ever, this last month in February, 14% higher than the previous record, and part of that was the lowest tax receipts that we've seen in years. Interestingly, Bernanke recently testified before Congress, this is the Federal Reserve Chairman, that deficits would lead to higher rates. It's odd that he's saying this because he's a big part of the problem, but now I guess he can say that he warned us. And so that's our Fed Chairman saying exactly what I'm saying. Americans' reliance on government is at an all-time high. The $256 billion drop in private wages that we've seen is 40 times that of the 2001 recession, just to give you an idea of the scope that we have. And the first time since the Great Depression that Americans are taking more money from the government than we're actually paying to the government in taxes. So, you know, we have to wonder who's going to buy our debt. As we've talked about here, the ratings agencies have warned they're going to downgrade us. The people that we depend on to lend us money are more and more turning towards gold and other things and not lending us money. It just came out yesterday, while I'm speaking, that China, for the third month in a row, has sold more treasuries than they've bought from us. So they're quietly trying to get out. It's a difficult thing. If they try to run out, then the value of all the money they've lent to us will absolutely disappear. So they're trying to sneak out before anyone notices and slowly reducing the amount that they've lent to us. We've talked about the mystery buyers at auction already. Again, foreign flows into the United States are negative. There's a Reinhart and Rogoff study. They put out a book, This Time It's Different. In the coming storm, we talked about the Peter Barnhof study, which showed that in all the previous instances of hyperinflation, we're right there with them, that we're going to receive that same thing based on the 40% debt levels. These guys looked at a different way. They compared debt to both GNP and annual exports, and the average default or restructure instances of these 29 different instances was 73% debt to GNP, 239% debt to export. The U.S., against an average of 73% of countries who had to be bailed out, they either restructured or defaulted on their debt. They averaged 73%. We're currently at 96%. Against an average of 239% debt to exports, the U.S. currently has 748%. So that's way bigger. And the reason for that is people for the last several decades have been willing to hold dollars as a store of wealth, as if you might hold gold or something. But again, there's more and more signs people aren't willing to do that. And so we're way over leveraged compared to any other countries in the past that have gone out of business. I'm just kind of flipping through. Greece is in the news a lot. We're not very different from Greece. And it's interesting, I'm looking at a chart. One reason Germany doesn't, as we talked about in the Greece video, one reason Germany doesn't want to bail out Greece is they're afraid about Portugal, Ireland, Italy, and Spain. Well, 3 of those 4 countries are in better shape than we are, but Germany looks at Greece and says, well, if we bail out Greece, we'll have to bail out those countries. Well, those countries are actually in better shape than we are. You could make an argument that Italy's in better or worse shape than us, depending on the factor. Again, we talked about China's dumping treasuries 3 months in a row, 5.8 billion this last month, January, and ironically, we're threatening China as currency manipulators. We work for China. If China pulls and decides to not lend us money anymore, it would hurt them, but it would devastate us. So it's very strange that we're threatening them right now. I think that's it right now. We see a couple possible scenarios. We see the possibility that somehow people keep lending us money and we just go into a heavy deflationary depression. We see more likely that hyperinflation is coming, and the question is, would it be a thief in the night that just comes and our dollars are worth very little very quickly? It will get worse after that, but it can change in a hurry. Or will there be this bubble burst, which is what I've been saying for a while, before that hyperinflation comes? That's my best guess. Thanks for watching. Again, to get full context, check out the coming storm video at the link next to this video. And if you have any questions, please let us know. Thanks, and God bless you.